Hello and welcome to Coffee Infused Crypto. On today's episode, I recommend you to have a double shot espresso because what we're gonna talk about is gonna blow your mind. So we're gonna discuss macro Bitcoin, showcasing the amazing similarities between the 2013 into 16 bear cycle or bear market and our current cycle. And we're gonna utilize the Fibonacci retracement tool, RSI, and Bitcoin on the weekly. So stick around, enjoy your coffee, make sure you hit the subscribe and like button and all of that good algorithmic YouTube friendly things, and let's deep dive into the video. So if we deep dive into, let's start with the 2013 area first to discuss what we have happening here. So this is a chart where you know by now we had this chart, the halving one, and I'm gonna link it in the top right corner so that you can watch that video. How did we end up with the green circles, the green squares, the big ones, and the golden halving? We discussed this chart earlier. So those are the halving dates that happened and the one that will happen, and 1 year into the halving green square. Anyways, go back, watch that one, and we are continuing the similarities between this area and current area. So if we flip on the RSI, and we're gonna rely on the RSI to hint to us where we had our tops, our bottoms, and what sections we went through when we had this run, this bear market run. So first, we noticed that the top here was signaled by the RSI, same area, around the same area was the top here. So that signaled the top, and then we started sell off. We had the red, blue, yellow, and green zone, those 4 phases within this time span into the halving. So the first zone was from the very top, if you notice here, signaled by the RSI as well. And then we went and rebounded, retraced, so did sell off and rebounded, and the top of our rebound, it took us 189 days for the red zone to form. And then after that, we went into the blue zone. After the rebound finished, the highest peak of the rebound, we did sell off into the very bottom, which was signaled by the RSI as well to be the very bottom of the bear market back then. And then we went into an accumulation phase, yellow box, and that lasted for 322 days, almost a year. And that zone finished when we hit the 0.5 Fibonacci retracement. So as soon as we approached or hit here and hit here, so that was the area where we ended this yellow zone. And at the end, we went into the green zone right before the halving, 196 days before the halving, and we topped at the 7.786 Fibonacci. So from here to here, we went all the way back to 0.786. But you're gonna come and tell me, but hey, Coffee, we've discussed this chart before, and we've always said we go into the golden zone. That is true. But then you're gonna say, but the golden zone is the 0.618, not the 0.786. And that is true too. But if you notice, we're using the logarithmic chart here. Okay, so if we flip the Fibonacci retracement, and this is a side note, you notice we have a Fibonacci level based on log scale. So if that by default comes in off, okay, so that if we turn it off, definitely we hit at the end of the run the 0.618 for the non-log scale. But if we flip it to have it as a log scale, then we have a hit on the 0.786. You can use it with a log scale or without. That doesn't matter much as long as you have them uniformed. Okay, so same here and same there. So we're utilizing the log scale one today because we're having a logarithmic scale on the chart as well, and that was the 0.786 hit target at the end of the green box and into the halving. So that was the top on the RSI, bottom, and then we rallied all the way up into the 0.786. On this run, we had a different scenario. This was different than this, than this. Okay, so it was a different run here. On this run, just a side note and fast one, we had an A, B, C correction. So that is a different first time and different bear market cycle when with an ABC correction, and then we went into running into a new all-time high. But currently, let's compare. So first of all, this red box started around this area because the RSI signaled top here. So this top was closer to the RSI stop here. So this was the first run, and the 65 is or did start the peak, the highest peak of this area. For me is the top of the last cycle. Okay, so the other one was a rebound into it, and that was the end of the red zone, not the top of the cycle, even though the price action came in a bit higher. But based on the RSI, and since this is based on the RSI theory now, then this was the top. The first run was the top based on the RSI. And then what happened is we spent 210 days in the red, sell off, and then rebound to the highest point. Okay, so this is, we have 210 days here. Let's go back here, 189 days. So after that happened, we went into the blue zone from the top into the bottom. Again, RSI signaled bottom at this area. All right, so based on RSI, this was the bottom of the bear market. This here sell-off was an FTX shenanigans, if you remember. So based on the RSI, this was our bottom again. And that in the yellow zone, it took us 322 days. Again, 217 on blue, 322 on the yellow. So again, here we have 224, 322 on yellow. So we go up to yellow and we approach the 0.5 Fibonacci. Okay, so we're still on track, went into the green with 196 days left and target of 0.786 Fibonacci retracement. So again, based on Fibonacci and based on RSI, we are exactly in track, jumping from zone 3 into zone 4 with an amazing similarity. And if this hits the 0.786 within the next 196 days, that would coincide with our halving date into our green box. And if you notice the green box, we always, I mean, here we started rallying, and almost like the rally happened like a dip and then a rally, and the big one, the green one, was in the middle of this green box, starting middle of this green box, or like the year into the halving. So now we are still early on both green boxes. This is the last zone. The green box here should end at around this area, and while we move into this green one, we should be progressing into the other half of our green box, the bigger one, which is the year before the halving. So this tells us, and based on RSI's tops and bottoms and the 4 zones that we hit so far, 3 out of 4, because we still didn't finish the 4th one, that we are very similar to this formation or this run on this run back in 2013. And this as well coincides with, let me bring up that chart. So this as well coincides with this one, I suppose. Yep, this one. So we go on the weekly, and this we discussed earlier as well, and here you have it. You know, this is, see, this is the 0.6 golden zone, and if we double click this, go down, no fib level, and this would be with fib level. This is the difference. So again, an occasion to show you. So we hit remove fib levels, remove 0.7, and then we have the hit to the golden zone 6.5. or if we flip the Fibonacci, then both would be the 7.76 level. So this coincides with our curve from this run, which here I did add a small triangle on the shorter time frame just to notice. But I mean, ever since we discussed this chart, I mean, look at this. We wicked on this week, but definitely week didn't end. And again, we have a beautiful wick to the downside. And if just we move this, look at this, guys. We wicked to our, remember this video. If you haven't, I'm gonna link it in the top right corner. Go back and watch it. It's very, it's very interesting, and yeah, to say the least, interesting to say the least. But yeah, this was before this week, or maybe that week had started. We still are on track, and look how beautiful this wick to the very bottom here is. So I did this small chart to just analyze it on the shorter time frames, and looking at this on the shorter time frames, I mean, this is Bitcoin on the shorter time frames on the daily, looking very beautiful. We have this here zone, right? The wicks here acting as a resistance, and now here flipped into support. So this line here is acting as definitely support for us, and this line here is acting as a resistance, and we're having this beautiful triangle. So we're trading here in between this triangle, and again we have this curve here as a support, which if we went into that, definitely if we go into it just like yesterday, it will support us, and here should support us. So technically this triangle would go with us all the way till here, but this curve will intercept and will come alongside here. So yeah, I mean, we are still heading, we need volume so that we can create this break to the upside, but the time is ticking, and we kind of have 1, 2, 3, 4 days at max for Bitcoin to make a decision to either fail this pattern or fail this triangle or keep on track. And we all know where we're heading to if we keep on track eventually, the golden zone, or the golden zone based on this chart, based on the non-logarithmic Fibonacci. And definitely we are going to the 786 if we flip the Fibonacci, and that would be the target we are heading to, which is around the $50,000 area. So I hope you enjoyed today's video. I hope you enjoyed your coffee as well. So I'll see you tomorrow. Stay safe, stay crypto, don't over leverage. The market is indecisive, and please stay, as much as don't leverage. Just don't leverage, or try to limit your leveraging to the minimum. The market is still indecisive, and we might be going anywhere in the short term. So that's why we're focusing on the macro and the end target. So with this being said, I'm gonna wish you a good day, good night, wherever you are, and stay safe. I'll see you tomorrow. Bye bye.